All right, let's dive in. Today, we're going to unpack India's really bold and fascinating economic playbook. It's a strategy that's being written in real time, all designed to navigate a world that, let's face it, is breaking apart at the seams. It's a story about a major crisis, some incredibly clever maneuvering, and a truly massive vision for the future. So let's get into it.
So let me start by asking you a question. Imagine you run a business, right? And your most important customer, the one who buys almost a fifth of everything you sell, suddenly turns into your biggest headache. What do? This isn't some business school case study. This is the exact spot India found itself in back in 2025.
Here's how we're going to break it all down. First, we'll look at the big challenge, what we're calling the 2025 trade shock. Then, we'll get into the response, this delicate strategy known as walking the tightrope. After that, we'll cover a huge financial pivot called the Great Reserve Shift. And finally, we'll look at the end game, the roadmap to a $10 trillion economy.
Okay, so let's set the scene. The year is 2025. This is when a geopolitical stress test, coming straight from India's biggest trading partner, the United States, just slammed into the economy like a shockwave.
What's wild here is just how fast everything unraveled. In April of 2025, the US hits India with a 25% tariff. But the real kicker came in August. See, Washington was not happy that India was buying discounted oil from Russia, so boom, they tacked on another 25%. That brings the total burden to a massive 50%. And hanging over all of this was the threat of a potential 500% tariff, a kind of economic nuclear option that just froze business decisions.
So what did this actually do to the Indian economy? Well, it basically created a tale of two different economies. You can see it right here. The traditional labor-heavy sectors, they were absolutely devastated. Textile orders just fled to places like Bangladesh, and gem and jewelry exports to the US crashed by 44%. But then, look at electronics and pharma. They were surprisingly tough. So what was going on?
For industries like textiles and gems, these are places that employ millions of people and run on paper-thin margins. A 50% tariff wasn't just a bump in the road, it was an existential threat. The diamond polishing hub in Surat, for example, took a severe hit, and that meant widespread job losses.
And here's the other side of the coin. The high-tech electronics sector, especially smartphone manufacturing, barely flinched. Why? Because India had made itself so essential to the global supply chain for companies like Apple as a key China Plus One destination that the US simply couldn't afford to mess with it. This integration into these critical global systems acted like a powerful economic shield. So, India is backed into a corner. What do? Well, they didn't get into a tit-for-tat trade war. That would have been economic suicide. Instead, they rolled out a really sophisticated, multi-layered response.
They called it the tightrope doctrine, and the name is perfect. The main idea was, look, we're not going to get into a direct brawl because the economic power is just not symmetrical. So instead of punching back, India chose to balance, to diversify, and to strengthen itself from the inside. It was a really savvy move.
So what did this look like on the ground? Well, think back to our shopkeeper. It basically boiled down to three really smart steps. First, find new customers. India hit the accelerator on trade talks with the EU and pushed into new markets in the Middle East and Africa. Second, support the family. The government set up a trade resilience fund to help its own businesses weather the storm. And third, buy smart. India kept buying cheap Russian oil, but to keep Washington happy, it also started buying way more energy from the US. A brilliant balancing act. But the trade moves? That was only half the equation. The other half, and maybe the more profound one, was a seismic shift in how India managed its national savings. It was a move away from paper promises to physical, hard assets.
This quote right here, it says it all. After the world watched the West freeze Russia's central bank reserves, there was a huge wake-up call. The realization was, if you keep your national wealth in another country's currency, you are fundamentally vulnerable. The only way to be truly in control of your assets is to physically hold them in your own country. And India didn't just talk the talk. In a single year, the central bank sold off over $50 billion worth of US Treasury bonds, a 21% drop. Now, what's so interesting here is that they did this when US bond yields were high, which is normally when you'd buy. This proves the decision wasn't about making a quick buck, it was about cutting their risk, the risk of the dollar being used as a weapon.
Let's just be clear about what we're talking about here. A U.S. Treasury bond is basically an IOU from the U.S. government. It's vulnerable to sanctions, to political pressure. Gold, on the other hand, has no counterparty risk.
It's a universal store of value that, if you hold it in your own vaults, is under your absolute control. And the results of this pivot? It was huge. By October 2025, the value of India's official gold reserves crossed the $100 billion mark for the very first time. And they weren't just buying it. They were physically moving hundreds of tons of gold from vaults in London back home to India, literally securing the national wealth.
But it wasn't just about gold. Check this out. An incredible 129% surge in silver imports. This wasn't just random market noise. Silver is now being seen as a strategic dual-use asset. First, you need it for green tech, like solar panels and EVs, and second, a new policy allowed Indian families to use their massive private silver stashes as collateral for loans, so the banks started stocking up.
So all of this, the trade maneuvering, the gold buying, it wasn't just about surviving a crisis. These are all pieces of a much bigger, much longer-term plan, the grand vision to turn India into a developed nation, or Viksit Bharat, with a $10 trillion economy. You know, a great way to picture this whole plan is to think of it like building a massive skyscraper. You can't just throw it up and hope for the best. You need a rock-solid foundation and incredibly strong structural pillars to hold it all up.
And India's plan rests on 4 of these pillars, which they call the 4 Ds. Development, which is all about building world-class infrastructure. Diversification, which is about kicking off a manufacturing boom. Digitalization, which means leveraging its amazing public digital platforms. And decarbonization, which is about leading a green energy revolution.
Let's take a look at that first D, development. The whole point of these massive infrastructure projects, like the National Master Plan called PM Gati Shakti, is to slash logistics costs. We're talking about going from a really inefficient 14% of GDP all the way down to the global standard of 8%. Cheaper logistics means Indian-made products become way more competitive around the world.
And then there's digitalization. This is just wow. In 2025, India's homegrown digital payment system, UPI, made up a staggering 85% of all digital transactions. This India stack is a public good, not a private monopoly. And now they're actually exporting it to other countries, creating a whole new kind of tech influence. And finally, let's talk about decarbonization. In 2025 alone, India added a record 44.5 gigawatts of renewable energy capacity. Now, this isn't just about climate change. It's about energy security. Every single dollar you save on expensive imported oil is a dollar you can invest back into building the country. It's a double win.
So when you pull back and connect all the dots, the smart trade response, the pivot to gold, that long-term 4D strategy, a really clear picture starts to form. It's a comprehensive game plan for building an economy that's tough, diverse, and strategically independent, and it really leaves us with one final big question. In this increasingly fractured and unpredictable world, are we watching India write the new playbook for how a nation can secure its economic sovereignty?